Hi everyone, welcome back to Be Rich. It's me, Vinod. I'm sorry I couldn't convince Anand to come today to the studio to record because simply he's not in town. So it's just you and me all alone in the studio again. So today I thought I'd talk about something interesting, which a lot of you Indians who are especially used to the stock market and always constantly chases about IPOs which are coming up in India, saying why aren't you telling me to invest in this IPO, the HTB IPO recently and the Tata Capital IPO recently. I mean, it's going to come. You guys have all been chasing us about that, asking us why can't we talk about that, why can't we invest in that? And I've been saying we don't apply for IPOs, and there's a specific reason for that. That's because in India, IPOs are such that we really don't have much wiggle room as investors, that we are priced out of it. Before, in the days of Infosys and everybody else, IPOs were launched at such a price that retail investors could walk in and join, as they say, much of the fruit on the table. But nowadays, thanks to venture capitalists and private equity and all the other things, we really don't get to participate in an IPO the way we used to, and the reason is that's the reason why we don't apply for it, because we are being more like fed like lambs to the slaughter. Because anytime a venture capitalist wants to exit, or a angel investor wants to exit, or the promoters themselves want to exit, they come to us and they take our money and leave the company with us, leave the business with us. So when they themselves are not interested in the business, we as retail investors should be wary of it, right? Imagine you're investing in a company where the owner himself doesn't seem very interested. He's constantly saying, do you want more of my business? Do you want more of my business? Finally, you're left wondering, scratching your head, saying, wait a minute, if your business is so good, why don't you want it? So that's the point. So that said, in India, it's very easy for retail investors to participate in IPOs. But flip of it, in the US and in the UK, it is much harder for retail investors to layman just to go and apply for an IPO like what we do in India and participate. And I thought we'll talk about this, compare and contrast what is happening. First, of course, what is an IPO? IPO is nothing but something known as an initial public offer. So, when a private company which has been doing business for some time wants to list its shares in a stock exchange to raise capital or money from the public, so the company switches from a private company to a public company. And when that happens, you think in a mature market such as the US, the bastion of democracy, and UK, one of the fathers of democracy, would be upholding this to the public, to the layman, to the Aam Aadmi, as they say, and offer him a chance. But no, it's not so easy. In the US, for example, you have two main markets. You have the Wall Street, the Nasdaq, and the NYSE. In theory, retail investors really don't get to participate the way we do here, because it's mostly a Wall Street game. That is why in the US, always they talk about the Main Street and Wall Street. And the IPO process is controlled mainly by the banks, which are not, I would say the banks, I can call them the banks, which are underwriters. These underwriters, can think of them as Morgan Stanley, Goldman Sachs. They control the show pretty much. The first bite of the apple always go to the biggest client, the hedge funds, pension funds, and private equity. So you can imagine, a guy's got a great business going, he wants to raise capital, he goes to the investment bank, and the investment bank's like, don't worry, brother, I got you. I'll set your papers up, I'll get you all through the SEC process and everything and get you listed in the IPO, but hang on a sec, but the first dibs go to my customers. And this is all negotiated in the back door. And that doesn't allow us, the retail investors in the US, to really get a nose in. And if you have access there, it's because of your broker, not because of you. Remember that. And if your broker is part of that IPO syndicate, of course, get to participate only if you meet these high minimum requirement, which they'll have, these minimum balances you must be having with them in terms of money, the volume of business you're offering them. Then, of course, who you know, how much you know them, and if you're lucky, so all that also participates. Some platforms, of course, I'm sure people will immediately lash out at me saying, what are you saying? Robinhood IPO access is one of them. SoFi is another one. Webull offer IPO to retailers, but even there, allocations are very rare, and oversubscription means most people get zero shares. So by the time shares have entered the market, the price is about to pop. Same thing what happens in India, and meaning the big guys have already made their profits. So same thing. Instead of the hassle of having to be an angel investor, a venture capitalist in India, and getting on the ground floor and waiting for the company to come to gestation. So imagine as a client and you got a lot of money in your hand and you want to quickly flip a coin. You can board the elevator and go on express without stopping on any of the floors, which you have to do here in India, and exit. And you can get extremely wealthy if you are connected quite well with the investment banks in the US. And you hop over to the UK across the pond, and what is the situation there? Well, it's very similar to the US. They have very large banks running the show. Institutional investors dominate in terms of applying and allocations, and even platforms like Hargreaves Lansdowne, AJ Bell, and Primary Bid do offer some IPO access to retailers. Most of these are structured, such as institutional book are the ones who are take the bulk of this. So a handful of big investors can negotiate the price and step in. Retailers only if the company chooses to offer to the public, it comes, and even then the forms and the deadlines are sometimes can prove very cumbersome as for retail investors. So unless you're watching it like a hawk, and most retail investors don't even hear about IPOs in the UK, unless it's not like India where they go on putting full page ads and advertising it. In India, retail investors are built into the whole IPO process. Why is that? Because SEBI, our regulator, has actually mandated that 75% of all IPO shares must be reserved for individual investors, and that's a lot if you look at it. 35% is quite a huge chunk. So that's why we have such huge retail participation in IPOs in India, and the platforms like Zerodha, Grow, Upstock, all of them make it applying for a IPO very easy, that too with UPI here, and you block your money in your bank and within 2-3 days know if you're allotted or not. And a lot of you enjoyed it in the HTB, those of you who participated in it, got allotted and you were celebrating. And that's thanks to SEBI doing this. And that could also be much of the reason why you see so much of build up to these IPOs, because, like in the US, these guys can scoop the cream and eat it. Here they can't really do it that well, so they've set up this whole process where we get inflated prices and then we are left holding the bath water in our hand while the baby is long gone. So why does this matter? Well, if you're a retail investor in the US and UK, it's not really a level playing field which you're entering, because the party's already started. The music's been playing for an hour or so. Much of the cake has been eaten and what's left on the table are crumbs. That can be said. While in India, you get the front row seat, as to say, to the party. But I would say because of the way, even in India now, it's gamed with investment banks and venture capitalists and angel investors dumping money and pumping up these unicorns to the point of the IPO for them to exit. Yes, we do get to enter the party and listen to the music now, but now we're not allowed to dance, nor we're allowed to touch the cake. We have to watch the buffet table and drool, as they say. And after much drooling, after everyone's had their fill, then we're allowed. They remove the hook or they open the gate. Then the normal darshan, the people who don't have special tickets can go inside to see the darshan of the Lord Mighty. Such is life, as I say, such is life. This is why I keep saying IPOs are not what they used to be. And like how we invest based on what our parents say, Bhaiya, beta, you do not know, just buy gold, buy land, buy lots of flats, buy lots of houses. That is what we used to do, Same way IPO also has that history now, where you'll have lots of people from my boomer generation sitting around telling you, IPO, Infosys we used to buy for 10 rupees. Now, you see, you should apply IPO, you never know. All that is rubbish. You guys, a lot of you who have burnt your hands would know this. There's lots of them to go around as example. So I don't want to rub salt on anybody's wounds. But that being said, that's where IPOs stand on, So don't apply on IPOs, don't focus on IPOs. Rather, look at quality stocks which have been there for some time, whose financials are clear and been audited and been tested, and you can study it. Be it in the US, where I said even there you have different ways of creative accounting to be done. So make sure you read the right balance sheets and you look at the right data and make your investment decisions based on that. And that said, I think I should get into some of these questions you guys have asked me the entire week. I can't get through the entire list of questions, then I'll be sitting here for an hour and Sadhu does need to get home. So I don't want to torture the poor man. I will try and pick and choose, cherry pick some of them and answer them. If you feel that your question does deserve an answer, then for this video, since you have been kind enough to watch the video, though I'm soloing it all by myself here, and you watched the entire video, you can definitely put in your comments down below this video, and I will definitely offer my saged advice since you think I deserve to give my advice to you. Right? That said, SAS 2550 says Kaizen has been implemented by the Volvo group. Yes, you're absolutely right. Volvo did adopt this and widespread lean system like the Kaizen across their companies, and that's very smart of you to pick that up. It did create some gains in margin and of course created value in the long term. But Kaizen, always done by the Japanese, is far more efficient. It's culturally built into them. We kind of stumble and we try to absorb this because of it not being in our culture, but we do try and adopt this. Bardiyar says, Tesla and Google's Waymo are pushing ahead. Do they bypass Uber, or does Uber still have a long-term potential? Great question. If Uber sticks to being a platform and doesn't own any assets, then the margin profile, but if robotaxi is something even Uber can get into, then maybe it gives them a bit of breathing room. We'll have to wait and watch. That would be my thing with Uber. I'm not an investor in Uber. I don't think I will be investing in Uber, but since you've asked about Uber, I would say wait and watch would be my approach. Anyway, as far as Uber is concerned, I would say wait and watch. That would be my opinion. I would do probably more waiting and less watching. Hare Krishnan, Japanese was slow in the process, and yes, the Japanese do have this paradox with them. It's known for this because they are meticulous and they like doing things correctly and doing it well. It requires a lot of patience, and patience is what is required to building quality. So it always comes to play. We have to decide, are you willing to wait for your gift, as they say, as an investor, for your capital growth? But I think as a value investor, it's worth waiting. If you are waiting long enough, you will bear the fruits of that waiting. And these companies tend to give in spades once you start giving. So it's a question of, waiting and getting on the right bus, then trying to catch every single bus which is there and hope that you get to your destination. So I'd rather wait for the right bus. HBLRP, can we reach out to your team if you want? Absolutely, you can reach out to us or reach out to me. I did put a Google form in Instagram where you can fill it out. My friend Hussein, and I got 4 guys helping him out now. They should get in touch with you. If there is a delay, I'm sorry. It does take time to crunch these numbers and call of you one by one, and to get you going. It's just not a simple conversation. There's a lot of things involved in that, moving pieces. Unfortunately, a lot of people, when we do reach out to them, they are initially interested, and then we do follow up. Hussein does the follow up, and you guys start ghosting him. So please don't ghost. If you're not interested with the proposition what Hussein offers you, you can just flat out say, hey, thanks Hussein, thanks for the call. I deeply appreciate it. You know what? I will continue watching YouTube and Instagram with Vinod and Anand, and that should be fine for me. Please just pass that information on so Hussein can put a line across your name and move on. But this, I will definitely put a new form. Tomorrow's video, I will create a new Google form, especially for people who are interested in Japanese and American stocks. If you guys are interested in that alone and investing outside India, you can fill that Google form because Hussein can't handle that. I'll have to handle that directly, and I'll put that form out. Niran Rediff, is BYD is China's, or yes, BYD is a Chinese EV leader, okay, and that's the one which is giving Tesla a run for their money. And a lot of people did invest into BYD. I think even Buffett was involved in BYD. I'm not sure if he still holds it or not. I don't know what happened, but you can definitely Google it and find out. But they are China's largest auto company, one of the world's largest EV producers. I think that they are the largest in terms of volume of sales. 6 V Chandan M23, please discuss PepsiCo, CNC, UHN. Yeah, I did talk about PepsiCo and UNH. CNC, I don't think I did speak. Did I speak? No, I don't think so. But anyway, I'll check to see, and we'll definitely talk. Anand, of course, loves Honda. Anand loves most Japanese companies. Samson Ryan 9604. Is it possible Toyota, Ford, Volkswagen acquire Tesla, BYD driverless cars in the future? Hey, anybody can predict the future. Pass my number to them. I would love to talk to them. I'm not an astrologer, unfortunately. It's not something I'm trained in. I don't believe in astrology. But anything can happen in the future. And is it the right decision for them to invest also? Cannot say. There's an old Zen story where a man has a son, and everyone in the village is very happy for him and says, oh, you're so lucky you have a son. And then the man says, oh, is it so? Then the son has an accident one day and breaks his leg and is unable to move and becomes handicapped and is unable to help the man anymore in the farm, and he becomes a liability, as I say. And everyone in the village comes to him and says, oh, how sorry for you. And he says, oh, is it so? Then 3 months later, the army comes to do recruitment, and they look at this guy with a broken leg and say, no need, and they leave him and they take all the other boys and go. And the villagers come to him and say again, oh, you're so lucky, because your son had a broken leg, they didn't take him. And he says, is it so? That should tell you a lot about, trying to look into the future and see, there's a lot of is it so. Anyway, hybrids are the best. Toyota Tech shared with Maruti, mileage is awesome. Tarun, Vinny and Krish. Well, I'm happy that you're having great mileage with your Toyota and that you're happy with it, and Maruti enjoying the benefits of this partnership which they have with them. But as an investor, I would say watch these partnerships closely. You saw what happened with Hero and Honda, Hero, Honda. So these things all play out in different ways. So keep an eye on these things as an investor. As a consumer of cars, you're very lucky if you're getting that mileage. Sitting inside city traffic like in Bangalore, no matter what your mileage your car might give, your car needs to move to get that mileage. You could be stuck in traffic for an hour or two, or even like Vishnu who went and got stuck in a traffic jam in Bangalore for 4 hours. Your mileage will be pretty poor no matter what you're driving. So I would tell you, that says a lot about our traffic conditions here, doesn't it? Srivatsav Rajgu, invested in 20-year US bond from Germany. What should I do? Ooh, that's a good question. If you're feeling anxious about the volatility rate and short-term duration, I need to really have a chat with you, Srivatsav Raghu, to know more about where you are and what your goals are, and find out. But long bonds can demand a lot of patience because you need to have the stomachs to see this interest rate swing. And I would say catch up with my team, and we'll discuss in greater detail about what you're going through, and maybe we can help you come out with a better plan. Because this is something which I cannot advise definitely over a YouTube video what you should do. Malaran Subramanian 7181. Why Anand sir is not discussing farm equipment or generator companies like Honda Power and Kirloskar? Well, okay, Kirloskar and Honda, sure, generators. You want to talk about power generation. Kirloskar is an Indian company. Maybe I'll do that on Instagram. So keep an eye out on that. Honda, he did speak about Honda, man. Okay, it's all part of Honda. So Sridhar is asking, how do you buy the Honda stock via US brokers? Do you use in-money vested? Well, we use IBKR and we buy the ADR of the Japanese company in the American market. That is the way we are looking at buying it. We're not directly buying the Japanese market, nor do we have any Japanese brokers. We use IBKR and we buy the ADR shares listed in the American market. I hope that helps. Sridhar again has asked, what about ABB Robotics? Yes, I'll have to deep dive into that and see. But in terms of ABB, a lot of you have asked me about the Indian ABB compared to the parent company. If you wanted ABB, I would suggest you should look at the parent company and not the Indian arm, because the European company is at better value compared to what's being sold in India. In India, it's overvalued as always, as Nestle, Hindustan, Unilever, you name it. Any of these companies like this in India tend to be overvalued. And that is why they love coming and launching an IPO here, like Hyundai did, and anyone. Anyway, get to the point. That covers most of the questions which you guys have thrown up. But if you had any questions which you feel that deserves a reply from me, put it down below, and I will definitely take it up in the next video. Me and Sadhu will try and get your answers done for you. Anyway, thanks for watching Be Rich. I think I've done an extended play today, but basically it was just to tell you how IPOs differ from here to everywhere else in the world, and how is it lucky to be an Indian investor, retail investor. In the days of Jane Street, should you be allowed to participate in IPOs? That is a question worth pondering on about, I guess. Anyway, thanks for watching Be Rich today. Have a wonderful day wherever you are. From here in Chennai, we wish you a wonderful evening. Me and Sadhu. Bye.